Today we are going to discuss regarding UAE corporate tax other adjustment. Why we are discussing here? Because you know that accounting profit is not equal to taxable profit. Why? Because if accounting profit is equal to taxable profit, so you can make your profit and loss accordingly. You can maintain all personal expenses is there. As you know that if owner make any personal expenses, you consider it in accounting profit, but this is not the logical. So that's why UAE corporate tax required other adjustment. As you know that corporate tax filing there are 8 steps. In 6 steps you have to fill other adjustment. If you want to learn 1 to 8 simple steps, you can watch my video. I will share the link. Further, today we are going to discuss only other adjustment. Due to other adjustment, your accounting profit will be differ from your taxable profit. Means your taxable profit will increase due to this adjustment. Why this adjustment is required? Because you know that as we discussed, if you entered in profit and loss your personal expenses, you need to extract there. So what the process? You need to fill here in the boxes of other adjustment. So for more understanding, we can take very simple example. For your understanding, suppose your financial statement showing accounting profit AD 1 million. It's included client entertainment, government fine, honor personal expenses. These three headings is reflected in your profit and loss account. Then resulted your accounting profit is 1 million AD. For the tax purpose, your corporate tax purpose, your accounting profit will not be considered. Why? Because there is a requirement of adjustment. This is today's topic. What the adjustment required? You need to add on 25,000. Why you need to add on only 25,000? So as per UAE corporate tax law, client entertainment 50% only allowed. Means 10,000 will allowed and 10,000 will be disallowed. So we need to mention whatever extent is disallowed in the adjustment box. So here we understand first step we need to add on how much 10,000 AD. Government fees 100% disallowed. Government fine, not fees, fine. 100% disallowed means 10,000 plus 5,000 means 15,000. Regarding honor personal expenses, this is also 100% disallowed. So you need to add back via the adjustment. So actual total adjustment is required how much 25,000. So your taxable profit will be 1,025,000. So I hope it is clear that your accounting profit is 1 million and your taxable profit is 1,025,000. Why this is different? Because due to some adjustment. Because as per UAE corporate tax law, we need to exclude some expenses which is not related with your business. So I hope you understand. So here we will discuss in detail each and every box of other adjustment. So first of all, we need to understand step 6 other adjustment. In other adjustment, there is a important 7 expenses which are disallowed, means which we need to add back in your accounting profit. Due to that, your accounting profit will increase. That means that will be equal to your taxable profit. Firstly, we need to add back entertainment expenditure. How much 100% or 50% we will discuss in next slide. Further, pension contribution. Pension, pension contribution also in some cases we need to add back. We need to discuss that cases. Regarding charitable donation, also we need to add back subject to certain condition. Regarding expenditure incurred in driving, regarding expenses incurred in driving exempted income, so that also need to add back subject to certain condition. That condition we will discuss in later slides. Regarding dividend, profit distribution or benefit of similar nature paid to an owner of taxable person. and further expenses not wholly or exclusively incurred for the business purpose. And after all, we need to fill one box, other non-deductible expenditure. We need to discuss one by one all with the example. Please watch my video till the end so we can understand in simple layman language all expenses which are disallowed in UAE corporate tax law. First of all, regarding entertainment expenses, as you know that there is a 50% disallowed rule. What it means? It means only 50% of entertainment costs for client, partners or supplier are deductible. And remaining 50% we need to add back in this box in the other adjustment step. For example, 82,000 business dinner to pitch a new client. 81,000 is deductible and 81,000 remaining is not deductible. So in this box we need to mention only 81,000. It is automatically add back your in accounting profit. I hope it is clear. This is simple scenario, but there is a technical aspect also involved this. So in next slide we need to understand the technicality of these expenses. You know that same food, same venue, different tax region. You are surprised, but understand staff annual party 80-20,000 expenses, potentially 80-20,000 is deductible. You're surprised. I will discuss in detail with the reference of UAE Corporate Tax Law Guide. Further, client dinner 80-20,000 expenses, but generally only 80-10,000 is deductible. So we need to add 10,000 through this adjustment part. Further, regarding honors private family party 80-20,000 expenses, here we need to fully disallow. You know, same food, same menu, but different tax result. But don't surprise, you need to watch my video till the end so you understand why staff annual party is 100% allowed and client dinner is 50% disallowed and honest private family party is 100% disallowed. So further, we need to understand what the logic behind that. You can see this is FTA guide regarding entertainment for employees. Example for employee entertainment like annual staff party, team building event, employee offsite away day, reward for achieving performance targets. This all related with the business. If you are doing these type of expenses and grouping under the entertainment allowances, that time 100% entertainment allowances will be allowed for you. I hope it is clear because this is related with the employee. If it is related with the client or related with the supplier or related with the partner, that time it will be disallowed how much? 50%. I hope this is clear. Further regarding next step is private pension contributions. Private pension contribution also it is coming under the other adjustment, means under the disallowed expenses. When it will be disallowed? Condition first, if not paid. If you make the contribution, but if you are not paying in the financial year, in the taxable year, so you cannot get the benefit of this, means 100% will be disallowed for this reason. Means if you are not paying pension contribution, so it will become under the other adjustment in the part of private pension contribution. In next condition second, access over 15%. If you make contribution more than 50%, for your understanding, we will take simple example. Employee earn AD 1 million, employer contribution AD 18,000. The excess amount AD 3,000. Whatever the excess amount, that will be non-deductible. So it will come under this box, under the private pension contribution, under the head of other adjustment. This is step 6 of CT5. I hope it is clear. Regarding next, unqualified charitable donation. If you make any donation to private entity like that, if donating to an unregistered neighborhood sports club, that it will be disallowed. Means you need to mention here as other adjustment, so it will increase also your profit. So I hope it is clear. You need to make charitable donation to recognize qualified public benefit entity. Otherwise, it will be come here and it will increase your net profit. I hope it is clear. Further, we need to discuss regarding expenses for exempt income. It is also one of the expenses which are disallowed in city law. For your understanding, if you earn income that is exempt for UAE corporate tax, the expenses directly related to the earning that exempt income are generally not deductible. Means if you incurred exempted income and you make some expenses for incurring that income, that expenses also disallowed. So you need to add back here through this box. For simple example, your UAE company receives qualifying exempt dividend income. You pay investment consultant fees, legal fees. So total amount is 30,000 AD. You need to mention in this box how much AD 30,000. That will be non-deductible adjustment. So this also resulted in increase your accounting profit. I hope it is clear. Further, very important, dividend and profit distribution. This box applies where an amount paid to owner is effectively dividend, profit distribution, similar benefit representing distribution of profit and has been recorded as an expenses in the financial statement. Means if you are paying some money to business owner like dividend, profit distribution or similar nature of expenses, so that means that will be disallowed, that will be add back for UAE corporate tax purpose. For layman, you can understand accounting profit before owner distribution is AED 1 million. Company pays the shareholder how much? AED 300,000 as a dividend. But the accountant incorrectly recorded dividend expenses debit AED 300,000. So the company cannot deduct its own dividend payment for CT, enter AED 300,000 in this box. I hope this is clear. Very simple. If you are entering 300,000 dividend in your profit and loss, you need to add back, because you know that UAE corporate tax law calculate their own taxable profit, not accounting profit. You need to make some adjustment from the accounting profit, then result will be your taxable profit. Then you have to pay tax on the basis of your taxable profit. I hope this is clear. Here, very important aspect. Most of the businessmen is confused about this. Distinction between salary versus dividend. Some accountants is doing to reduce the corporate tax profit. They mention the remuneration, manager remuneration. You can say that your partner's salary. You can say that, and reduce their profit. So here we will discuss that is logical or not. Genuine salary for the work performed. If owner performs some work according their proficiency, then that salary will be justified and that salary will be eligible for the corporate tax. If salary is just for increase, just for reducing your profit and reducing your tax, that time it will be disallowed. You need to make adjustment, then TP law will be applicable on you. I hope this is clear. This is very important topic for your understanding. So if you want to consider the manager's salary in the profit and loss, that must be justified as per market. Otherwise, you have to make adjustment for that. Currently or near future, you will get notices from the FTA and you need to make clarification on that. I hope it is clear. Further important topic is personal withdrawal and mixed use of expenses. That also a part of other adjustment. Personal withdrawal. If for layman you can understand, a freelance designer transfer AD 10,000 for a family holiday. You know that this is related to the personal. So fully non-deductible. This is very simple. It will not consider in corporate tax return. Why? Because it is not part of your business expenses. It is personal expenses. That's why UAE corporate tax law need adjustment for your accounting profit. Regarding mixed use of expenses, you know that sometime uh, in Dubai, most probably there are car, they are using personal purpose and company purpose for both. So, at what extent that is related with the personal purpose, that time, that extent you need to inform here, that will be disallowed. And further regarding example of a phone, if a phone use 60% for business purpose and 40% for personal purpose, then 40% need to be disallowed here and need to mention in this box. Here main concern only make the adjustment for the accounting profit on the basis of UAE corporate tax law regulation. I hope you understand. Further regarding other non-deductible expenses, this is last topic but very important for your understanding. You know that every profit and loss account there is a fines and penalties of government. There is a corporate tax, there is a recoverable VAT, there is a bribe, elicited payment, and foreign income tax payment. So you need to adjust that amount. You need to add back that amount. So if in your profit and loss you find out there is a government fine, you need to add back. There is any bribe, you need to add back. There is any corporate tax and recoverable VAT payment is there, you need to add back on that. Further regarding foreign income tax, if you are reflecting your profit and loss, you need to add back of that also. Then your resulted taxable profit will be correct. If you are not mentioning today, so you will pay for future. I hope it is clear. Thank you for watching my video. If you need any clarification, you can comment here. We will consider that.